Korea's central bank has just wrapped up its first monetary policy meeting of the Moon Jae-in administration. With no major surprises, it held its benchmark rate steady for May. Kim Ji-yeon reports.
The Bank of Korea has frozen its key rate for yet another month, standing pat at a record low of 1.25%, a figure that has remained unchanged since last June. The central bank says this steady economic recovery played a big role in its widely expected decision. The BOK pointed to exports, which have increased for 6 consecutive months since November last year, as well as rising consumer prices, as signs the local economy is recovering, making it unnecessary to lower the rate to boost expansionary measures. The central bank says it's too early to consider raising rates as the recovery is in its early stages, saying the rate of increase of consumer prices in April was 1.9%, just under its target of 2%. Although the rate difference compared to the U.S. Federal Reserve is minimal, the recent Korean stock market rally shows foreign investors still have a strong appetite for local shares, and there are no early signs of capital flight. The Bank of Korea adds that raising rates now would only put more pressure on the country's household debt levels, currently amounting to a staggering $1.2 trillion. High market expectations for expansionary fiscal policies under President Moon Jae-in, as seen in the recent stock market rally, is another reason why the central bank will not push for further monetary easing. With all this in mind, the consensus is that any changes to the base rate for May or even for the remainder of the year would have sent mixed signals on what approach Korea wants to take to boost the economy.
If the Bank of Korea raises the key rate, it could hamper the efforts of the Moon Jae-in administration in mapping out a supplementary budget to boost the local economy. On the other hand, if the central bank lowers the rate, it could worsen the soaring household debt problem, as it would encourage more potential home buyers to go out on a limb and buy real estate.
Public and private data on the local property market indicates that it's overheated, particularly in Seoul, as transactions during the January to May period are expected to surpass that of the same period last year. In its next monetary policy meeting, the Bank of Korea says it's highly likely that it'll raise its growth outlook for the Korean economy this year from the current 2.6% as the local economy continues on the path to recovery. Kim Ji-yeon, Arirang News.